Welcome to our channel. If you want to refinance student loans to lower your interest rate and monthly payment, follow this quick guide to evaluate your options. Step 1. Determine if refinancing makes sense by checking current refinance rates and comparing them to your existing loan rates. Consider your federal loan protections. Step 2. Improve your credit score before applying by paying bills on time, reducing credit card balances, and correcting any errors on your credit report. Step 3. Research multiple refinancing lenders, including SoFi, Earnest, Common Bond, and traditional banks to compare interest rates, terms, and borrower benefits. Step 4. Check pre-qualified rates with several lenders using soft credit pulls that won't impact your credit score, making comparison shopping risk-free. Step 5. Consider whether to refinance only private loans or include federal loans, knowing that federal loans refinanced to private loans lose government protections. Step 6. Choose between fixed and variable interest rates. Fixed rates provide payment stability, while variable rates may start lower but can increase over time. Step 7. Submit formal applications to your top 2-3 lenders with complete documentation including proof of income, employment verification, and loan statements. Step 8. Review final loan offers carefully, select the best option, and complete the refinancing process. Continue making payments on old loans until refinancing finalizes. Don't forget to like this video and subscribe to our channel.